ICT has been one of the drivers for growth of the Kenyan economy in recent years. How has Access Kenya positioned itself to leverage on this growth?
I think our key positioning has been our strength on our brand. We've been in this market for the last 12 years. We have established ourselves as a reputable, reliable data company, which has posted very massive growth over the last years. And obviously also being a public company, that puts us in the right place at the right time to be able to leverage this growth in the economy in general and specifically in ICT in Kenya. So we are well positioned, and we feel that we have both the internal resources in terms of manpower, in terms of money, to be able to grow successfully.
Let's take a look at your competitive edge. And you recently announced plans to inject 100 million shillings, and you plan this to grow your fiber optic coverage. Kindly elaborate on this.
Well, basically, as you would know from our profits posted last year, we are a company that focuses on the corporate side of the market. Now, in the corporate part of the market, then fiber infrastructure is a very critical bit of infrastructure that we need in order to grow. 2 years ago, when we invested in our fiber network, a lot of people had doubts as to whether we're going to be able to sweat the assets and actually get some good profitability from it. Now I think it is very clear to the market that the strategy was right, and that's the right direction. The 100 million we'll be spending this year is to fortify our position as the leading data provider. It helps us to expand the already existing metro Ethernet network we have. We're in Nairobi and in Mombasa. We're going to be expanding that network to ensure that other corporates who have been calling us to get onto our wonderful network have the ability to. So most of that money would actually be in just digging and laying more fiber.
Now, corporate data remains one of your key strengths, and in fact, some reports say that you control over 40% of the market share. Is there room for more penetration?
100%. You see, as the economy grows, more SMEs are moving to become corporates and bigger and larger enterprises. Like we've tried to explain to the market several times, we're not a mass market company. We're a company that has always focused on delivering high reliability services to companies that need critical things run on the internet. We run, for example, the central bank's backend in terms of the system's internet. And these are critical systems, people who really need reliability. That market is growing. We actually control 42% of the corporate market. And that actually represents about 80-85% of our revenue streams. And there is a massive amount of growth over there. We have people who need services that we're trying to still offer them today, and there is growth.
Moving on, Kris, how are you coping with the challenge of the mobile service providers? Some reports actually say that they are eating into your company's market share.
Not really. I think there has to be a better understanding of the market. The internet or the data market is broadly based. It's about 3 different segments, cost segments. It's a very large market, which is a mass market, which is what a lot of the mobile providers with the dongles, or what you call mobility. So mobile data, you can have that on your phone, you can have it on your laptop using a modem. That is a very large market. That's the market also that somebody like Zuku would be playing into. Then there is the midsection of the market, which you will call the corporate, top end of SME and corporate market. And then there's the enterprise part of the market. Most of our business lies on the top end of the SME with the corporate and the enterprise. So it is actually a distinct market. It is where people cannot afford to wait 10 minutes to be down. It's where reliability is critical. It's where redundancy is important. That is the market we play in. And that market is growing, and so is the mass market. But the mobile providers, what they've done is that they've actually come to make the market grow much faster, because somebody who would not have had the experience of the internet some years ago, because of course, can now be able to get onto the internet on their mobile phone, then upgrade onto a system which is probably a modem system on the laptop, and then get a fixed wireless or fixed data system in their offices. So it's actually it's a good thing. You know, competition is great.
Tell us more about your expansion strategy. Is Access Kenya likely to follow other Kenyan companies that have crossed borders and set operations in neighboring countries?
When we went public about 3-4 years ago, we had a lot of massive plans to go regional. However, we realized that Kenya is the biggest economy in the region. And it was very important for us to solidify our hold of this market before going out into the region. We feel we've done a lot of that now. We are almost complete with those plans. We're now looking regional. The thing about regional is that obviously you always have an option to either buy or to build. And so we'll be looking at our options as to how we decide to do our regional penetration strategy.
Moving on, Kris, what are the prospects for the company moving forward? Are we likely to see the company replicating its positive results that were posted in 2011?
Better than 2011. 2011 was our turnaround year. I think it was important for us to show the market that this is a speedboat. It can turn around, make a V-turn, and we made a very quick V-turn as to the losses of 2010. 2012 is us going to show the market again that there is, as you've asked me rightfully, is there growth in the corporate segment? Is there growth for Access Kenya? We will show the market that, and you will see massive growths and revenues coming our way in 2012.